Hey folks, I got another market update for you. And look, equities are up pretty big today, but the big story is gold's up big, silver's up big. Bitcoin, Ethereum, XRP, all breaking out to the upside. Big stories happening in the market. We're going to be covering all of it. So let's go with this market update for November 7th, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. Hope you're all doing fantastic, having a great weekend, and ready to do a quick little market update, which I don't think is going to be quick at all because we got a lot to cover. As I said in the opening, gold, silver, Bitcoin, crypto, the entire crypto market. We got some big updates happening there. And then, of course, the equities markets and what's going on there. You know, the Dow's up big. And I mean, today was a crazy day. So we got a lot to cover. This is also moving into a week where we've got an election coming up. So how's that going to play out? We got a lot to get into during this update. I'm going to try to keep it as fast and consolidated as I can. But this one might go a little bit long. Let's see. Before we get there, quick reminder, Raging Profits with ETFs, this 3-day challenge. We've been doing it for the last couple of days here. And even if you've missed those 2 days, go ahead and get over to trademaestro.com, get registered for it so we can send you the recordings because you can still catch up. I've shared some really interesting ideas in terms of managing your portfolio, your retirement accounts with ETFs. I've shared a very simple model of just a basic SPY trade where you can really do extraordinarily well just trading one instrument. And then I've shared a couple of rotation models where you can move your money into different locations. And so it's just some ideas. I'm not saying that's the perfect trade for you, perfect idea for you, but I think you'll really appreciate it. So get over to trademaestro.com and register for that. And you can join us live. If you watch this in time, you can join us live because we have another session coming up on Saturday here. In addition to that, if you have been living under a rock and you haven't heard me announce it, Market Maestro Accelerator starting next week. And this is a big training. It's exciting. You need to be involved in that. If you want to learn how to do all the stuff that I teach you here, all the stuff that I demonstrate for you, I'm teaching all of that in great depth in the accelerator. And like I say, the preliminary stuff for that starts next week. So get over to trademaestro.com, check that out. I'll put some links below so you can go learn more about both of these programs and what is going on there. All right, let's get over here to the market because that's what you're waiting for. And well, the Dow today ended up 400 points, which does not tell the story at all. Does not even it doesn't even almost tell the story. Futures were up big. Let me get rid of some stuff here. Futures were up pretty big, and we opened the day and we traded straight up. Can you see that? Let me make it even bigger. Because when we have a candle like this, there's a lot of story that's in this candle. And it's important to understand how it all took place. So we gapped up, and we opened at the opening part of the candle here. We traded way up here, which was a huge day. At one point, we were up to about 32.6, having closed yesterday down here at 32,000. That's about a 600-point gain. We were actually over 600 points at one point to the upside. But then what happened? The bears came in. And at one point during the day, the candle looked like this, which was actually a bearish. We were down for the day. So that's a lot of bearish momentum. And then at the end of the day, what happened? Well, the bulls came back in and they won. They technically won, but boy, it was a battle. It looks like we're up 400 points because we are. We're up 400 points. But remember, when we close up here and that number is positive 400, when we're up 400 points, that's relative to yesterday's close, way down here. Didn't tell you one bit about the story of how we got there, and it was really quite a journey. In fact, the S&P, while we did end up to the upside in terms of positive territory, look at this candle in the S&P. This is what we call a doji. Can you even see that? It's such a flat line. Okay, there's a little bit of movement, but not much. A doji is basically the same opening price as closing price. And yes, it's up 50 points relative to yesterday's close, which was way down here. But that journey, that candlestick is telling us a big story. In fact, it's such a big story that I think probably in the next week or so, I need to start doing some videos on candles to kind of reintroduce you, for those of you who aren't familiar with the story that we get in the candle. Look at the NASDAQ. This is the NASDAQ here. It's a red candle. Yeah, it shows that we're up 132 points, but it's only up 132 points because yesterday's close ended here and today's close ended up here. But when you look at the story of how we got there, this was a very bearish day. We gapped way up here to whatever that price is. We're gapped way up there, and then we just traded straight down. And while towards the end of the day, the bulls came back and we ended up closing here, that's how you got that candle. But man, that was quite a journey. And really, it is indicative and symptomatic of the bigger picture that's going on in the market. So let me get these charts reset. We'll go back to the Dow really fast here. I'll turn some lines on for you. The trends are continuing exactly as we anticipated. Got a text message today from my buddy Jeff Cole, and see if I can find it here. It's pretty funny. He said he was watching my update. Where is it here? There it is. He sent this text and says, it's funny watching your market update on a 4-day delay, because he's watching my update from 4 days ago, while watching TradingView live and seeing it do exactly what you said it would do. Yes, it is funny, isn't it? Markets don't always do exactly what we think, but when you understand the market structure, it's pretty easy to understand the movements of what we can anticipate. And this week, we've basically, for the last several trading sessions, we've seen pretty much what we were expecting. I'm not concerned one bit about a 400-point day to the upside. This trend is still bearish. I mean, that's just all there is to it. Now, maybe by the middle of next week, we see this differently. But what did I say Sunday night? What did I say midweek? I said that we were going to start seeing the market rolling over. We're looking at our stochastics here, which are giving us a clear indication that momentum had shifted. We're at that pivot area. We have both the trend line and this horizontal pivots coming into play, and we're starting to see it roll over. You're getting a little bit of buying pressure as we're kind of running into these moving averages, and you're just seeing the buyers and the sellers duke it out. That's what the market does. The biggest misnomer in the market is that when you see a market crash, people think it's going to go straight down. When you see a market rally, people seem to think it's going to go straight up, and that's not how it works. In fact, if you get knocked out of the market, if you're in a bearish trade and you get knocked out every time the market goes up, you have no bearish intestinal fortitude. If you are bullish in the market and every time the market kind of takes a little break for 2 or 3 days, you're freaking out and you're selling your positions, you have no intestinal fortitude. You got to grow some emotional intelligence here and realize the markets don't go straight up. They don't go straight down. They go in cycles. And I very clearly laid that out Sunday and reiterated that in the earlier update from this week, where we talked about the channel, and this is a descending channel. We are right inside the pattern. And the bigger picture, or bigger story, I should say, is what we see happening with the S&P and the NASDAQ. These guys are not even kind of bullish. Somebody on Facebook, I'm going to do another video to talk about this. Somebody on Facebook sent me a rather critical message and said that I had said, he said about me that I had said the market was going to crash in October. And then he quoted a statistic that he saw in a headline. And that headline said it was the best month in 40 years. Does this look like the best month in the market in 40 years? The answer is no, because it wasn't the best month in 40 years. The Dow Jones Industrial Average, those 30 stocks collectively, which, as I've addressed, have been heavily manipulated, they had a pretty decent month because of the manipulation. No, the S&P tells the story. We are not anywhere close to resuming a bullish trend. This bearish trend it really started to kick into high gear this week again. Now today, Friday, you had a lot of options closing, a lot of things happen on Fridays, but we had some buying and we gapped a little bit here. I don't think that's going to sustain very long. I'm very bearish in the market here. Structure is still exactly what we've been talking about all along. Oscillator still very, very bearish there. And the NASDAQ is even worse. What did I say Sunday and then midweek? I said this looks exactly like a bear flag. I said it doesn't even kind of look like an oscillation. I said I can't even pretend to call it a bearish channel because it's not. It's not a downward channel. It's not a bearish channel. What is it? It's a bearish trend. It is a bearish trend every way you twist it. It's a bearish trend. And the moving averages have never turned bullish. The price hasn't been above the averages. There's nothing about the NASDAQ that suggests that this bear market has reversed. It is quite the contrary. It is continuing nicely. We've got all the momentum oscillators that are back into position, supporting the bearish trend. Yep, I'm still a bear. Okay? Rawr. Sorry about that. So with that said, that's really my update for the week in terms of the big picture market. I want to go in and I want to talk a little bit about these alternative assets. Specifically, we're going to talk a little bit about gold and silver, and then we're going to talk a little bit about crypto. So if that's not interesting to you, then it should be, because they are telling a very important story, and there's a lot of economic things that center around both of these assets, actually, both physical metals and what we're kind of calling digital metals in terms of crypto and stuff. So let's start with gold. Let's just jump right in there. It was a pretty good sized day to the upside. I want to make your awareness clear. We are not in a bullish trend for gold yet. I'm not saying we're not going to get there. I'm just saying we're not there. It was a big move, though. This is the gold ETF, GLD, and this position closed up $4.66, which was a little bit over 3% move to the upside. So we gapped from way down here up here, and we closed way up here at the end of the day. Now, the bigger story is the fact that we're putting in a support here, and it's a support that we've been talking about, hoping would come in. I mentioned it earlier in the week. We just had not been seeing it yet. This is a fascinating candle formation. I'm going to try to see if we can't make that really big. I want you to just see the sentiment of how this played out. And because I want to try to really get your attention on the candles, I'm going to turn these averages off, and I'm even going to turn the drawings off. Yeah, there we go. Now, look at this red candle from 3 trading sessions ago. You see that? Here, let me change my pen color to something other than red so it doesn't blend in so well. How about yellow? Look at this red candle from 3 sessions ago. We closed here. We gapped all the way down here before the bulls came in. And then on the ETF, we gapped way up here. Now, realize that gold and silver, the ETFs gap a lot. These are not, they are true gaps in the sense that you can draw a line between the candles and you don't touch anything, but they're what we call suspension gaps. And a suspension gap is something that happens overnight for a 24-hour market. So gold and silver, they trade in the futures market and they trade around the world overnight. So you're going to look at these charts and you're going to say they gap every day. Well, it's because they do. And those are suspension gaps. So you don't put a lot of weight in that. But what we can put the weight in is the way that this took shape. We opened down here and we traded in what's known as a counter move. Now, if we blended that all together and we just, we looked at the red candle, and if we had a 24-hour market that continued trading, well, we do have a 24-hour market, but if this ETF had continued trading, I can imagine it would have closed about right there. That would be a candle that we would call a bullish counter attack. And that is a very, very bullish signal, especially if it's happening at support. And that's the reason I want to draw your attention to this, because the way it took shape, and I know I don't put a lot of attention and a lot of emphasis on the gaps on this chart because it is a suspension gap, but still the way it took shape is just so textbook for a bullish counterattack. Gap down, counterattacks against the previous day's close. Wow, what a great setup. So now we put our lines back on here, and you can really see that we're on our way back up to this pivot area, which on this chart comes in around 158. So that's for the ETF. It's around 1580 or so on the metals itself. That would be spot gold. The moving averages, which is my primary tool for trends, we have not confirmed a new trend on this. So that part is not confirming. Our stochastics, however, which is showing oscillation and showing kind of momentum here, it is gaining steam, and it does suggest that we're moving at least a little bit more to the upside. Don't be surprised if we get up to where we stopped, a few weeks ago, right around 160, 161. Don't be surprised if we get there and we roll back over. Don't be surprised. And if that happens, what you're going to see at that time is you're going to see your stochastics up here overbought. It turns around and crosses down, and those things will be right in line because that will be a channel. There'll be a sideways channel. Okay, we talked about the descending channel in the Dow. Well, we are not out of the woods for having a sideways channel for gold and silver, or for gold in this case. Okay, and that would look something potentially like this right here. We have all the makings of that channel, all the environment, if you will, to create that is here. What normally leads to a channel like this? Well, let me help you understand that period in terms of the market cycle is what we call an accumulation. It comes after a bearish move, big bearish move. Well, have we had a pretty good sized bearish move? Well, yeah. Since February, March, we were up here 192 and we sold off down to, 150, almost 150 at one point. So that's, quick math, top of my head is 20, 25%. That's exactly when you start to accumulate. There's your consolidation pattern right there as the positions are accumulating, and eventually it breaks out. Eventually. Okay, but don't be surprised if we get stuck in a channel. So I'm excited. I want to see gold do well, but I'm just trying to temper your expectations on the timing of this. A lot of people, because they've been watching different videos on YouTube or wherever you're watching them, and you're hearing what you think the price of gold should be, a lot of people are thinking this thing's just going to pop up overnight. Maybe it does, but more likely what's going to happen is it's going to consolidate here, establish a base, and then enter into a new bullish trend of some sort. So be prepared for that. Silver is the same way. I'm excited about silver. It was up 7% today, which is pretty big, especially for silver. This is SLV. But notice where it traded to. Why do you have a purple line there, Jeremy? Well, because I'm just that powerful. I can tell silver where to go, and it goes right to my spots. And look, guys, I like silver a lot. I own physical silver. I actually represent a company that does both physical silver and collectible silver. I'm very much into precious metals. I'm just calling the chart like I see it. Look at this channel. Okay, so I'm prepared, even though I'd love to see silver. Actually, I'm lying. I don't want to see silver shoot up. It would be great because I have silver and it would be great to have it shoot up. But you know what I really want to see? I want to see silver go back to $10 an ounce so I can buy some more at 10, just like it did in COVID. That would be fun. But regardless, here's what's happening. Doesn't matter what I want. Here's what's happening. What's happening is we are set up to continue in a channel here for a little bit. Now, what I'm hoping will happen, and I truly am hoping this, I'm not just making funnies here. I'm hoping that it will continue here and trade up to our next target, which is right around, on the ETF, it's right around $20.67. I talk about the ETF because this is what most of you are trading. So that's the reason I chart this. That's what I would like to see happen. I'm just wanting you to be prepared for continuation of the sideways move here, channeling behavior. Your stochastics are really lined out. Sorry, I keep forgetting to make this full screen for you. Your stochastics are really lined out to see that thing oscillate that way. Just in the same way that we saw the Dow oscillating inside of a channel. Look at how your Stokes are doing it, or your silver's doing it as well. Just right in line with your stochastics. Why? Because stochastics is your best friend when you're in a channel. Your moving averages stink. In a channel, your moving averages are totally stuck right in the middle of the price action. It's moving above it, down below it, above it, below, above it, below. So that's what you see happening. That's why these moving averages, they're not giving you any kind of signals that we can trade on silver right now. Okay? All right, talked enough about that. Let's talk about Bitcoin. This one is, I said it over the weekend, right? I said we were close. We're close. I call that a bull flag. It is a flag pattern. What is a flag pattern? A flag pattern is a continuation pattern that says that the trend is continuing. Now, we're early in this trend. We're so early that what I'd really like to see is I'd like to see it start to break out, come back down, test some support, and then continue. That's what I'd like to see. That's going to be the money. But you know what? It may not happen like that. It might be that we got the breakout right here. It is a breakout. That is a breakout of a pattern. The pattern that broke out is a bull flag. The only problem with this pattern, well, the pattern has no problems. The only problem with this chart and where it is we're so early in it, and we've had so much resistance that's come in with these other areas here, and it's had such a hard time getting going that I'm a little gun shy. I still like leaving my entry up here at 24,441, but if you want the earliest entry I can start to feel secure, this is it. We're there. We just hit it in the last 24 hours. I don't know why my pen has a mind of its own. I'm not trying to change colors. Come on, pen. Just draw. There we go. We got it. I mean, that's pretty much the first signal of breakout. We're above the averages. The averages are starting to separate, starting to cross. They've already crossed. Sorry, they're just starting to separate, and we're starting to see some momentum building in there. So that's what I'm looking at there, and that's exciting. The one that's a little better is Ethereum, because Ethereum has already done it. It broke out, it pulled back to the moving averages, and it started to continue today being Friday. Okay, that is a great sign. We had an entry in here at 1589. So if you missed that, that's all right. Still plenty of opportunity. Our next major target, now I should probably go ahead and put in some minor targets, which will be, you know, some of these, oops, didn't mean to do that. Right, that would be a minor target. Recent swing high. Such a minor target that in that particular case, I'm going to change the line to a dotted line. That would be around $2,000, $2,000 a token here. But our next major target comes in around 2,600, and then it's over 3,200. I mean, we got some big upside targets. If this goes all the way, your risk reward ratio on this trade is $5.75 for every $1 we're putting at risk. 5.75 to 1 risk reward ratio. That is incredible. That is huge. Okay. Big opportunity, Ethereum. The other one is Ripple. Look at Ripple, folks. I've been saying it was about to go. I've been warning you. We had our first highs. We've now had our higher lows, and we broke out. We are on our way. Now, right now, as I'm doing this video, you can see we got a little red candle building here. Well, it's the middle of the night, so, you know, it may ebb and flow a little bit here, but if we can see this continue, entry right around 53 cents, we might be finally breaking out and on our way with XRP. Wouldn't that be great? Yes, it would be, Jeremy. Thank you. It would be. We got targets all the way up the grid here. So we got 60 cents, a little over 70 cents. Just short side of 85 cents, or right around 83, 84 cents. And then the ultimate target on this one is 89. And that gives you a 5 to 1 reward to risk ratio as well. It's incredible the opportunities that we have with crypto. I'm going to have to do a separate update for crypto. We got so much to talk about there. It looks like maybe it's time to start doing that more regularly because we're starting to see some movement. So I will do that. There's nothing big to report on XLM yet. That's the other major one that we follow. But when it's there, we'll start reporting on it. Okay. Hey guys, I don't want to belabor it too long. So I've been going for about 24, 25 minutes here. I think that's all the market updates you really need. That kind of tells you what's going on. If you have any questions, just type them down below, and I'll do my best to try to answer them. Don't forget, Market Maestro Accelerator starting next week. You can still get into that. We've still got some discounted pricing on that. It's not as good as it once was, but it's still much better than it's going to be. So you want to save on that and get in there. It's going to be kicking off next week. Like I said, we got some preliminary stuff Monday and Tuesday and Wednesday. And yeah, you're going to want to join that. So get over to trademaestro.com, get signed up for that. And then Raging Profits with ETFs, great 3-day challenge. I'm really pleased with this. I think there's some great content. If you have not made it, that's fine. I know you've missed a couple days because look, people are working. If you can't make a noon live stream, then you can't make it. But don't let that be an excuse. We've got the recordings. They're here on YouTube. I've emailed them out. Just get over to trademaestro.com and sign up for the for the challenge, and then we can email you the links for all that. So it makes it really easy. All right, folks, if you're not subscribed, I don't know if you've subscribed or not, but if you haven't subscribed to this YouTube channel, you should do it right now. In fact, do not pass go. Do not collect $200 until you reach below and you subscribe and you like the video, because you know the likes apparently makes YouTube like us more. But the subscription, here's why that's valuable, because then you're going to get the videos sent into your feed, and you'll get the notifications, and you'll be able to keep up with these great market updates and all the wonderful stuff that we do, such as the live streams for things like our 3-day challenge, like Raging Profits with ETFs. So if you've missed those alerts, if you didn't know it was happening, if you're like, hey, that sounds really interesting, but I didn't know it, well, you got to get subscribed. So get subscribed below. And if you've not subscribed on our website, get over to trademaestro.com. And here, I'll put this on the screen because some people have a hard time spelling Maestro. They spell it with an I, but Maestro's M-A-E-S-T-R-O. Go to trademaestro.com. Get yourself subscribed to our mailing list on anything. All right, folks, I think I've belabored my point enough. We've gone on and on about it. You know what to do. Get yourself subscribed. Push the button. And thanks for being here. Thanks for watching. Thanks for letting me share some ideas with you. Let me know what you think. Leave me some comments below. And until next time, I wish all of you the best. Have a great weekend. Happy trading, and goodbye.